The history of double-entry bookkeeping is quite interesting. Fragments dated 1211 of the account book of a Florentine banker presents the earliest known evidence of the double-entry system. Benedetto Catrugli wrote a book of Trading in the Perfect Trader, which included a brief chapter which described many of the features of double-entry bookkeeping, although this work was not published for more than a century. Frater Luca Pacioli, a friend of Leonardo da Vinci, was born in Tuscany. He was a Renaissance man in the true sense of the expression, acquiring an amazing knowledge of diverse technical subjects: religion, business, military science, mathematics, medicine, art, music, law, and language. Pacioli was about 50 years old in 1494, just 2 years after Columbus discovered America, when he returned to Venice for the publication of his fifth book, Everything About Arithmetic, Geometry, and Proportion. It was written as a digest and guide to existing mathematical knowledge, and bookkeeping was only one of the 5 topics covered. The Summa's 36 short chapters on bookkeeping, of reckoning and writings, were added in order that the subjects of the most gracious Duke of Urbino may have complete instructions in the conduct of business, and to give the trader without any delay information as to his assets and liabilities. This is from Wikipedia. Bookkeeping is actually quite simple. There are only 3 components to it. The first is the journal, which is a simple listing of the various transactions that occurred during the period of time and where the money is supposed to go, that is, in which account and whether or not it's a debit or a credit. The ledger is the detail of the journal and shows what amount of money and what transactions occurred per each ledger. And finally, the trial balance is a summary of the balance of each of the ledgers, the total of which should be 0 to indicate that the bookkeeping had actually been balanced. Now, as mentioned in the slide, the first component to talk about is the journal. This is an example of a bookkeeping journal. Each item is numbered sequentially. This serves as a reference for any other part of the system to identify a specific reference. For example, Item 1, dated 2/1/2016, paycheck. The account that it goes into is the checking account. The amount is $3,000, and it's credited to the income account to the tune of $3,000. Take, for example, another example. Item 3, dated 2/3/2016, AES mortgage. The amount is $1,200 taken out of the checking account, so it goes into the credit, which is $1,000, and the interest, which is $200, goes into the interest account, and $200 is credited to the checking account. This is done for each item, so that by the time you finish the entries in the journal, each item is credited to a specific account and debited from a second. This is really all there is to it. A very simple process. It's very easy to understand. The second component of a bookkeeping system is the ledger. It's a book that contains 1 page for each account, which summarizes all of the credits and all of the debits made to that particular account. This is one of the accounts in the ledger book, the checking account. There's one of these for each account in your bookkeeping system. Notice there's an item which is the reference. Number 1, if you remember from the previous page, was a debit of $3,000, which came from your income and debited to the checking account. Then during the month there were 3 additional checks written. Number 3, which is $1,200 for the mortgage and the interest, plus 2 addition. The total of the debits and credits is indicated, which is used later. This is an example of the entire ledger book. Notice we have accounts for checking, savings, mortgage, food, interest, clothes, school loan, utilities, and so forth. Actually, you can have as many accounts as you find useful, or as few as you find useful. Now, let me show you how to use it. Take a look at the checking account. Remember from the journal, item 1 was a $3,000 income from your salary. Notice there's a debit for $3,000. And notice that it's item 1. Then in the account called income, again, item 1 shows a credit of $3,000, so that each credit is balanced by a debit. Again, the $1,200 for the mortgage, $1,000 for the mortgage, $200 for the interest. Notice it was credited to the checking account and debited to the mortgage and interest. 6 of the items in the journal have already been recorded. Now I'm going to show you how they actually are recorded. Going back to the journal, item 7 has not been posted yet. Dated 2/15/16, the school loan. The account for debit is school loan for $700, and the checking account is credited for $700. Notice how we do that. Notice the school loan is item 7. It's debited $700, and a corresponding entry is made into the checking account, item number 7, and credited $700. And for each item in the journal, these entries are made until the journal is completed. Notice that as a result of posting this transaction, the school loan now has a debit of $700, and the checking account has a credit of $700. Now the new credit balance is $2,164. The final piece of the bookkeeping process is the trial balance. This report shows that the debit and credit totals for each one of the accounts in the bookkeeping system, and it also shows the sum of the account balances, which is 0, showing that the books are balanced. This is the general form of the trial balance. What we will do is to copy the debit and credit for each account from the ledger onto the trial balance. Then we'll compute the difference by subtracting the credits from the debits. Notice in the checking account there is a debit total of $3,000 and a credit debit of $2,164. We'll copy both of those items into the trial balance. We have now copied the debit and credit figures from the ledger onto our trial balance. Notice $3,000 and $2,164. We'll do this for each one of all of the accounts. Doing this for each one of the accounts, we came up with the following table. Now we simply subtract the credits from the debits. equals this minus this. Now the balance for the car account is $32. We do the same for all of the accounts and paste. And we compute the sum of the balance. Doing this for all of the accounts, we have the following table, and summing the balance, we have a balance of 0, which means that we know that the books are balanced. However, I should point out that computer programs do this, and you won't have to, but it's good to know what happens in the process. Although doing bookkeeping seems like it might be very difficult to do, there are multiple bookkeeping programs on the market, all of which make it very easy to do anything. You simply need to put in the information. Some of these are Quicken, which is good for home and office, Microsoft Money, which comes as a freebie if you use Windows 10, FreshBooks, which only costs $9, QuickBooks, which is a net-based accounting program, any of which can be used, all of which do basic bookkeeping, pay checks, compute taxes, as well as other options. Once you have it set up, from then on, it's very easy to do. Just take the financial transactions that you had for the month, put them in, and you're ready to go. Or put each bill in as they come every day. Then at the end of the month, you can just run the program and be done with it. This really is a very brief introduction to bookkeeping. The point is not to teach you how to do it, but simply to understand what the process is.